Watch Budget 2018 with Bloomberg Quint.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets see profit booking at higher levels. The Nifty fights to hold the 11,000 mark. All sectoral indices trade in the red. Metals and private banks lead the fall. KPIT Tech gains the most since September 2017 after announcing its business rejig and merger with Birlasoft. Indian Oil Corporation is set to report its third quarter earnings today. Higher crude prices may impact its gross refining margins. And Amber Enterprises makes a strong debut on the exchanges, gaining more than 45% of its IPO price of 859 rupees per share.
Well, yeah, but that kind of is the headline material for when we start off trade the day before or 2 days before the union budget announcement, really. And the markets, a bit of nervousness. You wouldn't call this out of the ordinary, frankly. Looking at the kind of rally that we've had, a bit of a pullback is okay. But as we've stated in the last couple of days, and more so today morning as well, it's the broader end of the spectrum where maybe the real pain point lies. Let's just quickly bring up what the mid-cap and the small-cap indices are doing in the market breadth. Not too adverse, about 1% off for the small-cap space as well. The mid-cap space about, well, yeah, close to 2/3%. The market breadth would be adverse, 1:4 or I think 1:4 was the kind of advanced decline that we were working with, and pretty much around those levels. And if you look at the heat map too, I doubt it will be starkly different from what it was when we started off the day today. About 3 lines of red, 3.5 lines of red, and that's what's been the case. In fact, certain auto names which were starting to move up have come off. So iShares was up 3.5%, down about 2.5%. Dr. Reddy's continues its pain points, so down about 3.5 or 4% yesterday, another couple of percentage points at this hour. And OMCs have some bit of a respite, really, but that's fairly sporadic in nature. So no big gainers on the index, some losers, but no alarm bells, quite frankly. Though, Pradeep, the interesting thing that I saw was that while the indices may be down 0.5% to 1%, a clutch of stocks are getting punished big time. I mean, Vakrangi was down 20%, Shakti Pumps down about 6%. A lot of names facing some weakness.
Yeah, definitely. So you can see so many names, and some of those, like you mentioned, Vakrangi would figure among one of the prominent losers in today's trade. And also, if you look at, there are several other stocks that have been coming off, some of the high beta names that would include, the likes of Bhushan Steel, that actually moved up very recently, but started correcting today. Also, if you look at the overall breadth, there would be more losers than gainers, even in the mid-cap and small-cap space. As I mentioned, if you could show some more stocks that have really not been doing well in today's trade, coming off with good volumes, you can actually spot several losers. But also on the other side, if you look at the gainers, like some of those, like Navneet had mentioned earlier, would include KPIT Cummins, because in KPIT Tech, I beg your pardon, because the stock has come off day's high, but still, if you look at the overall trend today, it continues to remain strong after that announcement of the massive restructuring. So while Bhushan corrected today, Monet, the other stock which has been buzzing because of the kind of bids or say the report of attractive bids that has been reported in the media. Now this stock has done quite well today. Some of the key losers that we should be looking at today would include, the Paisalo Digital, for example. It used to be SE Investment. It has corrected over last few sessions with good volumes and continue to drag down. Some of these stocks that moved up with significant volume, sometimes hitting upper circuit, have started correcting, and the momentum on the downside remains as strong. It's easy to spot several stocks that are stuck at 5% lower circuit in today's trade, Navneet, in the broader market.
That's right, Pradeep. And in fact, profit booking is the theme, what we can call it, for the benchmark indices. And let's see if there is any sort of recovery which comes in the last hour or last half an hour of trade in today's session. But overall, if you look at the trends in the futures and options market, today's the day when, for a change, we're seeing more of call writing vis-a-vis put writing, which has dominated the system in the last few trading sessions. In fact, the India VIX has cooled off nearly 4 to 4.5%. This is the kind of fall which we've not seen, in fact, in the past few sessions. Now actually down 6%, so it's slipped below the mark of 17 as well. And as we speak, the India VIX is trading around the day's low mark. We were talking about the call writing. So if you look at strikes like 11,000, these are all the out-of-the-money call strikes which are seeing writing today. So look at 11,000, 11,100, 11,200. All these strikes have seen significant amount of OI addition, whereas on the put side, lower level strikes have started to add open interest. So 10,500 we know is a very good support for this system. That's sitting with huge amount of OI concentration as well. Besides that, you've got the 10,900 as well as the 10,700 strikes, which have seen OI addition between 3 to 4 lakh shares. In terms of stock futures, yes, we've been discussing KPIT Tech a lot, but if you look at the trends for the stock futures as well, today we've seen huge amount of long build up, 17% higher when it comes to the open interest. In fact, on the cash side too, the stock has gone up on very, very high volumes. It's trading around the 52-week high mark. So do watch out for the delivery data on the cash side. The other one of the top losers in the F&O securities is Walk Hard. Couple of these pharma counters every day are shedding a lot of gains. So today Walk Hard has fallen in very high volumes in the cash side. Whereas if you look at the Walk Hard February futures so far has seen significant amount of short build up, open interest up nearly 13% till now.
Oh, that's interesting. Thanks for that, Navneet. Just before we get in our market guest, a couple of results that have just come out, I need to highlight them. One of them is Graphite India, and that probably sets the tone for what HEG might do tomorrow as well. But robust numbers, net profit 340 odd crores versus 23 crores on a YOY basis. Revenues from 358 crores to 933. And I wouldn't be surprised if the margins have shown an expansion on a YOY basis. They've been doing that now for the last 2 quarters. It's a known story. But the fact that the juggernaut continues, it's a good sign. Just the market mood not really leading to the stock doing any better than the 1.5% uptick that has come in. A couple of other names like LG Bala also out there. And the numbers, and reacting to its numbers, I think the profits have doubled, 22 crores versus 12 crores. So good numbers for LG Balakrishnan, and this stock is up 5% too. But let's get you a market perspective here. 2 days before the budget. Important voice, Prasanth Prabhakaran, Senior Vice President and CEO at Securities, joins us right now on the show. Good afternoon, Prasanth. Thanks for joining in.
Hi, Neil.
While the indices, and barring today's or maybe yesterday's move, benchmarks trading at all-time highs, we've seen the small caps and the mid caps suffer. The small cap index, at least until this morning, was down about 5.5% from its recent highs. There is some amount of churn and some amount of profit booking happening at the broader end for sure. What are you seeing at your place?
So what has happened, Neeraj, is that the leverage positions that HNIs had built in the mid caps and small caps for the last 6 to 8 months has slowly started getting moved because there is risk aversion. There is already an up move that has happened in these stocks which has been large, and it has moved and leveraged itself into the large caps that are there because that is where the inflow of FII money has also moved. So HNIs typically are the smarter lot that are there in the crowd. So they have done the shift well in time. FIIs have the left alone feeling, so a lot of our institutional clients have come back saying that we had expected results to be better maybe a quarter down the line. Whereas the last 2 quarters have seen a growth which has been large. All your top counters which have come out with numbers, leaving aside the telecom space that is there, has shown numbers which are fairly robust. You have seen recoveries in top line which has been missing, and a bottom line increase which has been missing for the last 5 odd years. You have had downgrades which have been consistent. For the first time, institutions have come back and told that they have had a left out feeling. They have mistimed the markets. They had caught the IPO rally. Actually, though exit happened from secondary market last year, it moved into the IPO market in a large fashion. But this time, There has been sustained buying from start of this year as and when results have started coming. And they have gone into counters which have showed promise. So you have had a corporate bank which has started doing well, which has shown results. Axis has come back. There is interest that has built up. And there is interest that is getting built in other corporate banks. You call it ICICI, you call it SBI. You will have built up because the expectation is that they will also show a degrowth in NPA levels, some amount of growth in credit offtake that is there. All positive signs. So frankly speaking, not too worried about it. Maybe 1 week, 10 days down the line, you'll also see the money going back into mid caps, which have been badgered down in the last 10 days off. So short, risk-averse trade. Large caps are far less volatile as compared to the mid caps in case budget does throw out a few bad surprises. But I think there's just a matter of getting the next 2 weeks over with.
Okay, so it's likely to be a short and sweet correction as you expect. But, money is moving out of mid-cap also, we have been told, because of some kind of reject that mutual funds have been forced to, carry out in their portfolio. So there is some realignment happening. Also, if you look at the valuation gap between mid-cap and large-cap, I think that's again at record levels. You'll still be bullish on mid-cap?
So you go back, the news that has been doing the rounds actually was a CLSA report that came out on December 1st, which said that there will actually be a flow of mutual fund money coming into mid caps rather than moving into large caps, because that is where the gap is. Okay. Whereas the news that got floated around was money is going to move away from mid caps into large caps. The report has just hit my hands around a week back, so I'm so clear about the contents of that report. There's a large amount of money that is waiting to get deployed into the mid cap space from the mutual funds is the expectation that is there. And post this budget getting over and leaving aside the sectors which will be adversely affected, you will still see a sizable amount of money going into a lot of mid caps that is going to be there.
Well, post the union budget, I guess the focus will then shift to the state elections. I guess there are 7 to 8 state elections which are lined up this year. Tell me, agnostic of all these events which are lined up, budgets, state election, general election next year in 2019, what is your call on the markets? Because we know these sort of events will bring in volatility into the market, but the near term, that earnings recovery which everyone's been talking about, are you bullish on it?
So volatility is there for traders. So the trader community thrives on that entire feature. And so elections that are going to come in, irrespective of whatever is the result, however close it might be a call, it is still going to bring in the volatility. And a volatility at 11,000 Nifty and at 5,000 Nifty, even a 1% is 110 points move in Nifty at any point of time. But the fact remains that irrespective of the volatility that is there, Nifty for the last 20 years has managed to give a 14% CAGR return. You have to remain invested. You have to choose the right stocks. And as long as you have chosen the right stocks and you have ridden the rally as a shareholder of a company that you want to own, you will make decent amount of returns in this market. Trading is not everybody's cup of tea, but largely when you interact with clients, you'll realize only the investors have made money and traders have traditionally been break-even over a period.
What's the kind of feedback right now that you're getting from the client community or also the institutions you interact with?
So there is not too much of worry that is there. It is an event that has to go by. Everybody expects volatility. Everybody has cut down leverages. What traditionally the percentage of leverage used to be 1:4 is down to 1:1 or 1:3 that is there. Clients themselves have become smarter since the crash that has gone by in 2008. Unfortunately, I've seen that. And I see a lot more confidence and a lot more risk aversion that is there from a clientele from their side itself. The rotation that has happened from mid caps to large caps had surprised me, because that shows a big sign of maturity, not just riding the rally, but booking profits and moving into a counter that was new. So it's a good market to be invested in. I don't think so there's anything that is going to go wrong. As far as earnings is concerned, your last 2 quarters have been actually proving it right, saying that you have to remain invested. That is why your valuations were high. You are at 27 at the top end of the multiples because of the fact that people expected this recovery. Our expectation was that Q2, Q3 should be when the recovery has happened. It happened much earlier. So in a way, even though valuations are stretched, you'll still see a lot of money moving into stocks which have performed well.
Has your team been sanguine about what's happening to one half of the largest weightage in which is BFSI, and that is NBFCs, because banking results have been good. The question mark is on NBFCs, right? Select housing finance companies have shown pressure points. Select other NBFCs have, in a pocket or two, just shown those signs, and the rising bond yields don't help either.
So, Neeraj, if you NBFCs had run up quite a bit, irrespective of whatever was there, and their cost of borrowing is high, irrespective of whatever is there. So that is why Capital First merged with a IDFC. You still didn't see valuations affecting too much because their CASA is so low at any point of time. So NBFCs will start doing well as and when the interest rates start following from here off, and which doesn't seem to be. That is not going to happen at least in 2018. So you will remain. You won't get top class returns from a NBFC pack that might be there, but it is a book that you should have in your portfolio at any point of time. You give it a good 3 or 4 years, you'll see the story playing out slowly and steadily.
Okay. Fair call, and I think I'm told IOC numbers are likely to be out as well, but we also have an FMCG company, an FMCG packaging company too coming up. Mold Tek Packaging, I think, is the stock that we are going to get, so we'll get that in moments from now as well. But I'm told the IOC numbers are out, so we'll just talk about that in a bit. Just one word before we let you go, Prasanth, on the OMCs as well. By the way, IOC numbers are out. Let's just address that and then take in a thought from Prasanth as well. Standalone net profit at 7880 crores. Wow, the estimates were 4752. There's a substantial uptick on the net profit. I don't know if there are one-offs leading to this or no, but it's a much higher number than what we were working with. 4752 was the number. Yes, the Bloomberg estimates were 4752, and these numbers have been substantially higher. Than in a bit, we'll get in Somit as well to talk about it. Bonus, I think there was also meet for special dividend as well. So I don't know what all have they announced. Have they? I mean, do you have the details?
There is a bonus that is the announcement coming on Bloomberg now. 1:1. That is likely to be the ratio. That's again, it's the news coming from Indian Oil to give 1 free share for each held, which means 1 bonus for 1. Stock is now moving up on that update. 1:1 bonus.
I think the bottom line is also boosted because of other income for the quarter is on the higher side. So that's 1,353 versus 807, which we're seeing in the corresponding quarter. But if you look at the revenues from the operations, they do appear on the lower side if I compare it on year-on-year basis. Good news, finance costs down, compare it sequentially on year-on-year basis. The excise duty remains the same, but on year-on-year basis, it has seen a bit of downtick. So net, I guess the numbers are looking good. Probably you're getting that reaction because of the bonus which they have announced. That's 1:1, 409 on Indian Oil. In fact, all the oil marketing companies were doing pretty well, but the numbers do look good. Net profit way ahead of what the street was estimating. It is boosted a little bit because of higher other income as well, which has been posted during the quarter. We'll get our analyst in a while to...
By the way, GRM is also higher from $7.36 a barrel. It's at 8.28. So even the core business has done better. At least the refining business margin has gone up. So that's again an update coming in. 19 rupees per share. That's the interim dividend, Neeraj, that you were talking about.
Yeah, so dividend, bonus, results, all of them look okay. Prasanth, final thoughts really?
And so oil marketing companies, the refining margins have been going up.
Yeah.
You talk about Reliance, so it's obviously going to reflect finally into the bottom line that is going to add up. It's a must-have. The only point is that your current deficit goes out of shape in case your oil prices keep on going up from a global perspective. From an individual perspective, I think it's a rally to ride at this point of time. We think that crude will go and stabilize anywhere between $70 to $75 anywhere at those levels.
Okay. So, well, the going looks okay. This is the net profit trend, and Prabhakaran believes OMCs could well be a space to ride as well. Anyways, great having you, Prasanth. Thank you so much for taking the time out and being with us today. Always
my
good
pleasure.
Bye. Right. That's well the view from Securities with their thoughts on the markets. Somit would be up and about any moment to talk about what other intricacies has he spotted on the numbers as well. But on the face of it, almost everything that they have done looks good. They are way ahead of what the Bloomberg estimates were on almost all counts, including the operational numbers and the bottom line as well.
Neeraj, there's a substantial jump when it comes to the EBIT of the petroleum products. It's 10,682 versus 5,253, which was seen in the corresponding quarter. So probably that's the segment which has contributed the most to the kind of bottom line growth one has seen this time around. In fact, if you look at the EBIT for the petchem business, that's at 1,344 versus almost 1,500 crore, which was seen in the corresponding quarter. So overall, the segmental performance also
Mold Tek
looks pretty
Technologies
good on
with that.
year-on-year basis. In fact, I think we'll ask Somit about the outperformance that one is seeing from the petroleum product side of the business, because even in the September quarter, the EBIT was 4,800 and it's almost double. It's 10,682 crore of EBIT from the petroleum product side of the business. In fact, the revenues also, if you see, they have been higher, but they're not higher by 50% or even 100% growth, which one has seen from this side of the business. So 1:1 business, good profitability for the company. Then the numbers look pretty good. In fact, they are strong set of numbers. GRMs, as Pradeep highlighted, have been on the higher side. The gross refining margins, in fact, the average gross refining margin, the company says, from the period April to December 2017 so far has been $8.28 per barrel. But let's go across to Somit to find out what exactly has led to the outperformance that one is seeing this time around from IOC. And Somit, I was just looking at the EBIT from the petroleum products. That's doubled for the quarter.
Yes, also the petchem business has petchem contribution to the EBIT has increased significantly. You can see that overall the numbers are above the analyst estimates. EBITDA has come in at around 13,269 crore rupees. That is a jump of around 80% compared to the last quarter. Margins are coming at 12% versus 8% in the last quarter. Revenue has also seen a significant jump, 22% jump compared to the last quarter, to coming in at around 1,10,000. The net profit is also beat on the analyst estimates. Analysts were expecting the net profit to be close to around 4,700 crore rupees, but the number is close to 7,883 crore rupees. Now it is the inventory gains that have helped the company as a bottom line and the EBIT performance, and it has also offset the weak refining and the marketing margin segment. Now, if you see in this quarter, the gross marketing margin earned by the company was lower compared to the last quarter, and this was and the inventory gains are the main thing that have outperformed in this quarter and led to such a result for the company. So we'll have to wait and watch what were the inventory gains that the company has reported in this quarter. Now, if you see the refinery throughput, that has come in line with the analyst estimates. Now analysts were going with a number of around 18.2 million metric tons, and it has come in at that number. Also the sales number has been good, has been very good. It has come in around 22 million metric tons compared to the 22 million metric tons that the company has reported in the Q3. So the sales volume are good, and also the refinery throughput has been good for IOCL in the third quarter of financial year 2018.
All right, Swami, thanks a lot for bringing in all those details with regard to IOC, which is doing well. It's reacted positively to its earnings. 1:1 bonus will be a bonanza for the existing shareholders as well. And I guess the stock's moving up. Probably that could be one of the factors with regard to IOC stock price movement. Now up almost 3.5%. But I guess all the oil marketing companies since the morning session have been doing well, be it BPCL or HPCL.
Yeah, so the going is good. Let's see how it lasts. I was asking Pradeep this morning about what's happening within the commodity space as well. Maybe nothing happening is also not good news, not bad news, considering the surge that crude was in.
Yeah, so crude has cooled off a bit, and that's good news. As we have been talking about this, although there is a complete pass-through, but there could be some impact that we have seen over time on the margin of these oil marketing companies. So a cool off in crude is also good news for OMCs, so that's also aiding.
Yeah, so that I'm actually interested in seeing what sugar companies are doing, because this morning sugar had a bit of a bounce. So let's see if there's a dead cat bounce in some of the other sugar companies as well. No, not quite, Pradeep. Sadly, the stocks are not, or maybe being weighed down by the broader market mood, because these stocks are in a bit of a tizzy and they're not showing any signs of a meaningful recovery, if you will. There is some bit of a recovery, though, I thought I saw in the stock price of Vakrangi. It's had a very, very volatile day today. But from being down 20% at a point of time, now down just about 8.5%, which is also strong. It's not as bad as being down 20%. Okay, now the management that we wanted to talk to, Mold Tek Packaging. Now, Antique Stockbroking in its report say that this is a unicorn in making. They're very bullish. Talk about customer stickiness and a bunch of other things. To talk about that and get the company's perspective, let's get the management. Mr. J. Lakshmana Rao. J. Lakshmana Rao, who is the Chairman and Managing Director of Mold Tek Technologies, joins us right now on the show. Mr. Rao, thank you so much for joining in. Did I pronounce your name correctly? Mr. Lakshmana Rao.
Yeah, you did it now.
Okay, I did it now. Great. Thank you so much. And apologies if I didn't do it right the first time. But
It's okay.
I'm guessing you're getting a lot of things right, because I remember a conversation that I had maybe a year ago with Mold Tek, wherein you had first gotten those set of orders from Asian Paints to make those exclusive plants. From there on until now, people are talking about the sticky clients, the new set of clientele coming in, and the earnings growth rates as well. Tell us, how is business looking like?
Business is good, much better than the first 2 quarters, because the impact of GST is subsiding and people started concentrating back on business. So that is one aspect. And the second aspect is we being now exploiting more opportunities in food and FMCG space. We are finding more and more new opportunities coming our way, which is also helping in our growth.
Could you share details there? Because as far as I understand now, I mean, from my memory, that you've been a leading supplier to a lot of large clients like Asian Paints, for example, and you've had a few probably FMCG clients coming in as well. Can you talk about the new opportunities?
Yeah, as of now, we are just taking the quarterly results on 5th of February. So on the numbers, I can't talk as it is under the window period. But as far as the new clients are concerned also, some of the clients are very fussy about their new product launches being discussed. So, but certainly you can guess some of the top names are working with us in different ideas, product ideas, which could be sizable in nature. Like you all know about Lickables, that Mandalese chocolate, for which we developed a beautiful container. It's doing pretty well. And we also now seeking some work from other nutrient powder manufacturers and some other food major players, and also in FMCG. So some of the projects which we are undertaken, I can tell in generic products, that is ice cream tubs and ghee containers. These are coming out very soon. Ice cream tubs will be introduced in this summer. Already we are talking with large ice cream companies for which we will be introducing this in this summer. And for the ghee, we already have entered through our Q-Pack. If you know about our previous trial to get into edible oil and ghee by square containers, which was not really taken off earlier, is now picking up gradually. And the numbers are picking up mainly with the ghee industry. And they're also asking about retail packs in ghee with IML decoration. So these packs we would be introducing in June 2018. So our plans of enhancing our food and FMCG share in the overall sales is going as per our previous projections.
Mr. Rao, in fact, majority of the brokerages are bullish, and this is one of the reasons what they mention in their reports, that the rising share of foods as well as FMCG segment could drive the growth for a company like yours. Could you tell us what's the current revenue contribution from this? I guess in FY17 it was somewhere about 6%. What are the internal targets going into FY19? What sort of revenue share can we expect from this segment?
Yes, in the first half we hit 15% in the food and FMCG, up from 5.5 last year, and I think the third quarter is much better. So we will be looking forward to closing the full year very close to 18.
Margins higher from this segment vis-a-vis the other companies, for example, in the paints that you cater to?
Yeah, what I mean is overall contribution of food packaging last year was hardly around 5.5–6%, has gone up to 15% in the first half of the financial year. And we expect that to grow further up in the second half of the year.
Okay. Could you tell us your top 5 clients, how much do they contribute to the revenues? Because I can see some big names from the likes of Asian Paints and a couple of other players. Is there any concentration risk that you face?
Not really. Of course, Asian Paints continue to be our largest client, followed by some of our lubricant and then Mandalese, and a combination of paint, lube and food industry is now in the top 5 of our client deal. And we continue to enjoy the confidence of Asian Paint, because recently they've given us 2 opportunities at Mysore and Vizag to set up plants with a commitment to pick up certain quantity of product for the next 7–8 years. So that kind of confidence we enjoy with Asian Paints because of our quality and consistency. And apart from that, they are the only people who are, say, I can say around 20+% of our sales but the rest all around 8 to 10, the top 5, 8 to 12.
What sort of growth, Mr. Rao, can your shareholders expect when it comes to the top line? I guess in FY17 you did almost 300 or 310 crore. What sort of targets that you have for FY19 and FY20?
Yeah, FY18 we will be happy if we close the gross sales in the vicinity of 400 crores, including our small contribution from our RAK plant. So going forward, we are confident of going with at least a 15% CAGR.
15% revenue CAGR, and I'm guessing the bottom. I don't want to get into specific numbers because you have your numbers coming up, but would it be safe to assume that the bottom line CAGR would be higher than the top line CAGR?
It should be, yeah.
It should be. We'll look forward to talk to you post your numbers as well, Mr. Rao. I heard you say that coming out on the 5th of February, so we'll probably look forward to talking to you then or on the 6th of February as the case may be.
That'll be nice.
Yeah. Thank you so much for joining in today and all the best for the business.
Thank you very much.
That's Mr. J. Lakshmana Rao talking about his thoughts on their business. Antique believes that it's about a 20% or a 20% top line growth and a 30% bottom line CAGR that the stock can show the next 2 or 3 years.
It's got some marquee investors, Neeraj. I think Ashish Kacholia holds 3%. You've got some institutions from the likes of DSP, BlackRock, as well as HDFC and Edelweiss trusteeship. So it's got some marquee investors also on board.
Yeah, interesting. Okay, well, is this the spotlight though? No, the spotlight is on Muthoot Finance. The stock's fallen for the 4th straight day. Pradeep is back after a brief hiatus with his chart checks. Pradeep, what's happening here?
So a clear breakdown, although, you know, in short term, the stock is probably oversold, like you mentioned, has fallen for 4 days in a row. And this is not an FNO stock, so you cannot really short. But the point that I want to make here is it has reached the make or break level. It breached that level during the day, has bounced back from 400 odd levels. It bounced back earlier also from the similar level. But what is happening? There are 2 important things that one should be looking at. And if you start looking at this chart from here on, you look at it, you know, there is a complex head and shoulder pattern that is building. And we almost got a breakdown below that. Now, whether we close below this line or we close above it, like we have recovered during the day, that's something we need to wait and see. But there is a clear weakness in this stock, and there is possibly after a small bounce, it will correct again, because as I told you, in the short term, it's a bit oversold. That is one. The other key point that one should be looking at, you know, look at all these 3 moving averages, 50 days, 100 days, and 200 days. So while the price pattern of this complex head and shoulder was actually building, what has happened is stock kept finding support near these key levels or the key moving averages, but eventually one after the other these moving averages have been breached on the lower side. So in a way you could say that the moving average convergence and divergence that you normally see on the chart, there is a clear breakdown which kind of tells you that the stock is now quoting below all 3 important moving averages. And also what is important to note is that 50 DMA has now fallen below 200 DMA. So that's something you call death cross actually in technical. So which means the stock has peaked out on a very long-term chart. If you look at this stock, I think over the last 3 years, it has gone from 150 odd levels to 500 plus 520 levels. And from there, this correction has started. So maybe the long-term rally is now maybe getting over. That's the indication that the chart has given you. In the short term, for anyone who wants to sell now, it should either wait for a bounce, and it may go back to the 200 DMA at around 450 odd levels. That could be maybe the best case scenario. Or your stop loss should be at the level of this neckline on the head and shoulder pattern, which comes at around 410 levels. Neeraj.
Well, interesting. So watch out for Muthoot Finance as well. But I think, as Pradeep mentioned, not an FNO stock, so you've got to keep that at the back of your mind. Now, before we get in to our experts, just a quick programming note. At 2:45 p.m. today, Jayesh Khilnani and Yatin Vota will be in conversation from the dealing room of Sher Khan. Himang Jani and God of Dua will be talking to us. We'll give you the entire dealing room pulse, as we've been doing for all of the last 3 days. Nevertheless, our 2 technical experts, though, are join us right now with their sense of the charts and how to trade the market currently. Sacchitanand, Uttekar, AVP of Technicals at Tradebulls. We'll talk about his thoughts on the charts in a bit. I think we'll get in Meghana Malkhan as well. But Sacchitanand, good afternoon. Thanks so much for joining. Okay, I think you're just having some problems connecting with Sacchitanand. We'll just get that going in moments from now. But I'm told Nipun Mehta at least is with us to talk about the fundamentals. Let's get him in on the conversation. Nipun, good afternoon and thanks so much for joining in. Convergence or rather contrasting views, Nipun, that we've gotten till now in the day. While the markets are showing that mid caps and small caps are taking a battering, we just had a gentleman from Securities saying that there's a bit of shift of positions from mid caps towards large caps, but the net positions, at least at their brokerage, are on the long side, both on the leverage and the unleveraged side. What do you think is this causing this near-term weakness? Is it due to the event day after tomorrow? And will it correct itself post the event getting over?
Well, good afternoon, Neeraj. I think there are several reasons for this that I can think of. One, clearly, there is a degree of lightening of positions, given the kind of rumors that have been going around on what could be announced in the budget in terms of capital gains and or any loopholes that might be plugged. So that's something that's creating a bit of nervousness and ensuring that some bit of profit booking is happening as far as mid-caps is concerned. The other possibility that one can think of is movement from within the mutual fund schemes happening from mid caps to large caps, since large caps to a degree had been underperforming. You'd seen significant gains coming in on the mid cap schemes, and that as you see more and more FIs participation, and increasingly that participation or incrementally that participation has been largely into large cap stocks. Clearly that run-up that is there is not something that fund managers would want to miss out on, and you're seeing a degree of switching happening from the mid caps to the large caps. So I think the other possibility that I can also think of is higher margins that exchanges have announced, given the level of the market, and some degree of deleveraging that could have been that could be happening in some of these mid-cap stocks, which have been used for leveraging, which have been used for margins. So I think clearly all around reasons for it. I think it's a great opportunity if one is looking at certain mid-cap stocks where the results have been good, where there is that visibility of growth that is coming in. And as a trend, what you're really seeing is whether they are good results or bad, you're really seeing profit booking happening in a lot of these mid caps. So our sense is wherever you have an eye on fundamentally strong mid caps, this could be an opportunity probably now, or if there is greater profit booking happening post the budget, that could be a great opportunity to accumulate some of these mid caps.
So this correction is a great opportunity to get into the mid-cap names. That's the call from Nipun Mehta. I believe our technical experts are also with us now. Sacchitanand Uttekar is joining us on the show. Sacchitanand, if you can hear me, what's your call on markets? Do you think there is an opportunity to exit your long positions now at current levels in Nifty, or do you also see a chance here to short?
If you really look at the trend, the trend is still intact on the positive side. We are really not, conveying that this is an exhaustion or any reversal as of now. So if you look at the entire structure and the formation, we stand by our opinion that the market is heading towards a level somewhere close to 11,300 or so, and that's why it is a very good opportunity right now before the budget, wherein one can take a directional call. So probably what we are recommending here is doing a call ratio spread in Nifty, wherein we are recommending that 11,200 call options should be bought, one lot, and against that 11,500 two lots should be sold. So if you look at this entire combination, we have a total risk in hand of around 50 points, and we are expecting this particular spread target to be around 155. In case if there's a abnormal movement, only about 11,750, the risk will be maximized. But we don't see that kind of a scenario, and that's why we are looking at this particular decline as an opportunity to create a position which is wherein your risk is very much limited.
Sacchitanand, what would be your top trading strategies then?
Well, we continue to be bullish on the pharma sector, and Sun Pharma is one particular stock wherein we have seen that after a flat correction, the stock seems ready for a move towards 635, 630 zone. So a long position here with a stop loss close to 576. The second call that we are liking is the way Titan has consolidated. So we are expecting a breakout to be witnessed soon. A target of around 974 and a positional stop loss of around 873.
Okay. Sacchitanand, just one quick thought. I don't know if you've already discussed Dr. Reddy's and some of the other pharma stocks or no. But there's some inherent weakness that has crept into that pocket. What are your thoughts here, particularly large cap pharma?
Well, if you look at Dr. Reddy, then there is a clear breakdown that we have witnessed in yesterday's trading session. If you look at the way it opened, and since opening itself, there has been pressure. So, I think this particular pressure may continue in a stock like Dr. Reddy. But if you look at something like an Oro Pharma or a Sun Pharma, or even Cipla, wherein the trend has been very much positive. If you look at Oro, it is quite stabilizing right now. So we are optimistic in a couple of pockets, and Sun Pharma would be our top pick.
Okay, but from the same space, we've seen Wockhardt, which has been under pressure since the morning session. And if you could just pull up the intraday chart of Wockhardt, it's now down over 8%, 833 there. Sacchitanand, at these levels, if somebody had initiated a short in the morning, should they be booking their profits?
In case of Wockhardt, probably you can, if anyone is short, probably I would recommend that you can continue with this short positions with a stop loss somewhere close to 860 now. If you look at the support per se, then the 520 weekly average is placed somewhere close to 785, 790. So probably we may see a drag towards that level. I would recommend that one should hold on to their shorts, and a stop loss can be placed around 860.
Also, Sacchitanand, if you have had a look at Bhushan Steel, the stock is quite volatile. It's news driven. It's difficult to assess, which way the fundamentals should really be valued, because you don't know what the equity investors will get. But right now, when everybody's kind of guessing and punting, what could be the key technical levels to watch out for?
Well, first of all, the stock has been an underperformer. It has really not shown any signs of inherent strength. But if you look at some of the key levels, then probably
We'll get that going in moments from now. But it's a very important point that Pradeep has raised. And Nipun, this morning when I was doing a small check on what's happening with the small cap end of the market, if you do an MRR, if you do a 1 month return, I was using the Bloomberg terminology, but if you do a 1 month return on the small cap space, and if you look at the top 10 losers, invariably 5 or 6 or 7 of them at least are the ones which are the NCLT cases. Bhushan Steel, despite receiving that largest bid, has gone down 12%, arguably because people might believe that the equity value might not be given that much consideration as the debt value would be, and that would naturally be the natural course. Are you going out and shopping into any of these names which could be buying interest, be it Bhushan Steel, be it a Monet or some of the others?
So, yes, for sure. I think there's very clearly an opportunity out there, depending on which stock that you're looking at. But our sense is, on the one side, if you observe that run-up that has happened, our sense is that uncertainty is going to remain for a lot of these companies for a few reasons. One is there is still, there was hope that a lot of these deals would get concluded in a shorter period of time. I think for some of them, it's taking longer. Two, the valuations for some of them are still likely to be uncertain. So whether existing shareholders may not benefit, to what extent, what's the visibility of a turnaround, all of those uncertainties is something that's going to ensure that that run-up is not expected to be very fast. We're looking at companies where the managements possibly have ensured or are ensuring to a degree that they either come out of NCLT or they don't get acquired, whether through court procedures and or ensuring that the profitability or the turnaround is fast enough for them to ensure that the banks cooperate with them. So our sense is there will be a few companies which are going to be in both these baskets, one where the promoters themselves might be able to turn it around, and the other where the acquisition that could happen, whether through other promoters, alternate promoters or ARCs or any which way that could be there, where the valuation could be higher than what the street expects, and there could be a run-up. So these are going to be volatile stocks, but our sense is clearly there will be a few companies where this opportunity will exist.
Okay, so that's the call coming in on these distressed companies, and we'll have to see. There is no precedent actually to judge how much equity value will finally come out of these stocks. If you look at the markets today, Big Nifty Bank is down by almost 200 points now, and that has actually been dragging the indices lower as well. Financial services segment is where we see a lot of weakness. Sacchitanand, if you have spotted any short trades in this segment, whether PSU, banks or NBFCs, if you could share with us.
Well, coming with the short trade is very difficult at this point of time, but since if you look at the entire trend structure of PC Jewelers as a stock, this is where we have seen that there is some weakness which has been witnessed. So probably the way it has breached below the important level of around 560 and it is quoting somewhere close to 530 right now, there is still a substantial downside which is still open. So probably stop loss can be placed somewhere close to 555 right now, and this is one particular counter wherein there could be some selling pressure in the coming days.
PC Jewelers is week. Interestingly, we talked about Muthoot, so maybe jewelry and gold finance, and that is a segment which has seen a lot of pressure.
Yeah, it is, and currently seeing pressure as well.
But these are the stocks actually we've been discussing. They've gone up so much. Neeraj, we spoke about Shakti Pumps yesterday. The numbers
Down
were
6%
so good. The counter is down almost 7%. The management commentary, however, was pretty bullish today.
Yeah, but that's
profit booking across the board, I guess.
Yeah, that's not helping. Yeah, the good commentary is not helping either. By the way, so Wockhardt is down 8%. Vakrangi is down 10% now. I think the spoiler was, to my mind, was Emami, and the top line miss out there was certainly disconcerting.
Top line, volume growth miss.
Yeah.
It was miss on majority of the parameters.
And in contrast to what maybe some of the others have done, not all the large cap FMCG names have done that.
Yeah, I think the dependence on the wholesale market is also not working out post demonetization, is I think one of the analyst report also highlighted. But I think the volume growth was way below what the street was estimating, and let's not forget it's on a low base of demon quarter.
Yeah.
So 12% expectation, it came at 6%.
Yeah, Nipun, would this be a case specific thing? The disappointment that Emami is shown?
Well, our sense is yes. Broadly, if you see across the entire FMCG space, there has been decent growth that we've seen, not just on the fact that, yes, it was on a YOY basis on a lower base, but also the fact that companies have changed strategies, altered their strategies, not just on pricing of some of the premium products, but also the fact that the rural focus has been increasingly there over the last 2 or 3 quarters. And that's something that has consciously helped a lot of these FMCG companies. You're seeing top line growth, bottom line growth, margin expansion, visibility of higher growth coming in, coming out of the rural spending. So I think as an one-off case, probably our sense is this kind of lower growth has been witnessed. But overall, for virtually the entire FMCG space, you're likely to see far improved growth, not just in the top line, but also on the bottom line.
We would also like to know what would be your top pick ahead of budget. But before that, let's see how what dealing rooms are actually doing right now. Amidst all this uncertainty, we get you a mood check every day. And today also, let's head across to Jayesh Khilnani, who is today in conversation with Hemang Jani and Gaurav Dua at Sharekhan. Over to you, Jayesh.
Thanks for that, Pradeep. So we have with us Mr. Hemang Jani and Mr. Gaurav Dua. Alongside me is Yatin Mota as well. Hemang, to you first. What's the sense of the dealing room ahead of the budget? I mean, yesterday the Nifty went up. Today we are seeing some bit of correction, especially for the mid-cap. Are there something specific sector-wise that the dealing room has been picking up?
I think what we've seen is that in the last 1 month, there's a bit of a divergence that we are seeing, that the index is actually holding out pretty well, with contribution coming in from IT and some of the other heavyweights in the banking. Whereas the mid-cap overall are going through a bit of a profit booking. So people are a bit cautious because we've already seen that the market has run up so much. And since there is a major event, there is a bit of a caution. But overall, my sense is that there is nothing to be worried much in terms of any major negative as such. Though level-wise, there might be a bit of a caution. But if you see the earnings and the overall global setup, that continues to be good. So we are not too worried about the event per se. I think market could consolidate for the next few days, but overall we continue to be positive on the markets.
Himang, in terms of the budget expectations, a lot is spoken about rural, low-cost housing, and probably government focus on being populist, especially for the rural markets. Do you think all of these events are already factored in the markets, and do you think going into the event, the expectation from infra, from rural housing or urban housing or low-cost housing, or probably something related to agriculture, be it fertilizer or be it irrigation, the expectation from the market is too high?
I think expectations are not that high because we have a major election year, and the fact that the government has already been talking about their focus being on the rural side. So some specific package and the focus will be there in the budget per se. But I think the market is not going to take any kind of a negative view of that. I think overall the market is looking at the situation where how realistic the assumptions are in terms of revenue and whatever allocations is there, how the balancing is between the rural and the overall infrastructure side.
Right. And Gaurav, one thing that everybody wants to know, if there will be a long-term capital gain or no long-term capital gain tax. Do you think that is something which is spooking the markets, or in terms of inquiries from HNI clients and retail clients, are they very worried about this fact that there could be a tax on long-term capital gains?
I doubt that they'll have that change in this long-term tax. Most of the clients this thing had some issue in this, but I think the noises that you get in the media from the officials, this thing does not seem that there'll be change in the taxation structure.
Gaurav, I was just going through the note that you'll have published, and there was something on negativity for the insurance space on account of rationalization of the corporate tax. Can you elaborate more on that and how it will likely negative impact on the insurance sector?
So if they have a change in terms of the MAT rate, then you could have some increase on the taxation on this insurance. So that could be a slightly negative call. But we doubt that this change will actually come through in the budget.
Himang, in terms of strategy, I'm sure ahead of the budget you might be getting calls and queries regarding how really to approach the capital markets. And as you mentioned in your opening comments, the Nifty is probably up, but stocks are moving down. So, the convergence or the divergence which is there currently in mid caps versus the indices is quite high, because of which probably a lot of people who might have gone short on Nifty and must be long portfolio must have suffered losses or probably mark-to-market losses. So in terms of strategy, in terms of approaching the markets, what are you really advising to your clients?
See, there might be phases where this kind of a divergence will happen. This we had seen somewhere in the month of May or June also. Okay. I think the strategy should be to basically have a proper balance in the portfolio. You should have a decent amount of exposure to large caps and mid caps both. And particularly since we have a budget coming up, I think some of the ideas and themes which are focused on the rural side, something on the defense side and infrastructure, I think this could be flavor in anticipation of some announcements being there in the budget. So we have come out with certain ideas. Let's say on the rural side, we would be looking at something like Maruti, United Phosphorus, defense side, Bharat Electronics, Ashok Leyland, and on the infrastructure side, something like KNR Construction, Sadbhav Engineering, L&T. I think these are the stocks that we think would do well in anticipation of a good budget.
So on the sector side, infrastructure, defense
Rural.
and rural, these are the three themes that, as a house you have been
Yes.
talking about to your clients.
Yes, absolutely.
Gaurav, there was another piece in the note which says that you all are expecting import duty on gold to be cut from 10% to about 2.5 or 5%. What are the top picks in that space, and how much will be the impact in case this does happen?
In this space, I think the best stock to play this space is, space is this thing title. And that's the way you should this thing play this rather than going this thing, down the line. Apart from this, I'll also add a bit to what he was saying earlier. We are also asking our clients to invest in certain this in large cap stocks that have not actually this thing done well in past this in couple of years, especially stocks like this in ONGC, Petronet, and also some of these this thing, private sector banks and banks and this thing IT. So I think that is the space which will offer some upside, and the risk is also risk is this thing lower there.
Himang, one final question from my side. Pharmaceuticals and IT, these are the two stocks which were probably laggards in the first half of this financial year and now have started picking up. If you look at the market leadership also, it has moved to IT stocks and pharma stocks in the past few days. So do you think these are the sectors probably insulated from budget, and it's the time to look at all of these stocks, especially the stocks which have not moved in IT and pharma?
See, IT, anyway, we are seeing a good amount of turnaround. If you look at the numbers also, and the management's body language also is turning a bit positive. So, since the market was by and large underweight on IT, you're seeing some kind of a money flowing through in IT. Okay. But as far as pharma is concerned, I think, the numbers are still not showing up. Right. So, I think we are a little away from a complete re-rating. But I think a stock-specific approach is what we have been recommending, like Biocon, Cipla, Natco Pharma, where we see the visibility. I think that is where we have the comfort. We don't think that sector per se has bottomed out as such. Okay. So we are a bit cautious there.
Okay.
One final question from me as well on the NBFC front. How Yatin spoke about IT and pharma being the laggards. The rally primarily was driven by the NBFC space, which of late has shown signs of cooling off, probably because of the rates going higher. What's your expectation for the future?
So the NBFCs will like underperform when the when this thing bond yields are actually going up. Apart from this, valuations aren't cheap in that space anymore. So we believe that space could underperform for for this thing some more time, and you need to be this thing stock specific there.
So that was the team at Sher Khan. Continue to remain bullish as far as themes like rural markets are concerned, and probably sectors like defense as well as IT. Of course, they remain cautious on sectors like pharmaceuticals, wherein probably we saw some bounce back, but probably not supported by earnings. So that's all at Sher Khan from Bloomberg Quint. Stay tuned.
Yep. Well, thanks for that, Yatin. I'm hoping people will just stay tuned, because the next half an hour has a lot of interesting things, including Fab4, including the top closing strategies from our experts, and of course, a chat with the management of Vaibhav Global. That's coming up on the other side. Stay tuned.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making it in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
Welcome back. You're watching Countdown with us. Well, the markets continue to be weak. In fact, watch out for the 3600 mark on Sensex. It could just get breached in today's session, as Sensex now is at 36,027. And Nifty, which has a good support around the mark of 11,000, has been trading around 11,045 to about 11,050. Well, the volatility has also cooled off today. So after a lot of trading sessions, you've seen India VIX declining by almost 6 to 7%. Let's talk about the individual stocks. It has been a very strong quarter for a company like Vaibhav Global. If you look at their bottom line and margins, both have seen an expansion on a year-on-year basis. Joining us on the show to discuss the quarter gone by is Mr. Aggarwal, Group CFO at Vaibhav Global. Mr. Puru Aggarwal, good afternoon to you, and thanks a lot for joining us today. Congratulations and good set of numbers.
Good afternoon and thank you so much.
Could you tell us what led to this strong operating performance this time around? We've seen margin expansion.
Our retail market is US and UK. Both the markets have been doing pretty well. In UK, this quarter we have seen a constant currency growth of 23%, and in US we have seen this growth at 11%. We have underway to constantly improve the overall customer experience with initiatives such as improved programming, upgradation of studios, a simplified website user interface, customer care service, and enhanced logistics and on-air guest host and experts. So all these initiatives of improving the customer experience along with the new product offerings and addition to the merchandising, all these things that have been helping to this growth.
But what led to the expansion in margin? Did you save on cost or you earn better on every unit you sold?
So our margins have been healthy for all the past years as well. And this quarter is no exception. We see the strong margins in future as well.
Able to sustain the margins in double digit of 13% that you've posted?
So just to inform better here, our business model is such where large part of the cost is fixed, which means that the moment top line is up, it goes to the bottom. And that's what actually is happening if you look at quarter on quarter. The moment top line growth is there, because majority of the cost is fixed, then the EBITDA and PAT both goes up.
So, okay, let's talk about that. I'm guessing what you're trying to say is you have well do about 13% EBITDA margins in quarter 4. That might take your overall FY 18 EBITDA margins to double digits as well. So that's a given. Let's talk about the factor which could lead to this, which is revenue growth. Now 9 months, you've done about 1150 odd crores for FY18. That's about a 7% jump. Is that 10% growth YOY something that you factor in for the next few years? Is that possible? Because your base is certainly not very large. 1200 crores or 1500 crores is not a substantially large number to show growth on.
So, a couple of things here. In the first place, our core business is B2C. In constant currency terms, in B2C for 9 months, we have grown 19% in UK markets and 12% in US markets. Now, both these markets, these are developed markets of this globe. Growing at these numbers in these markets in itself is an achievement, because in these markets, even 2-3% growth is considered as a good growth. And having 12% and 19% growth is really something which is commendable. And we are confident of having double-digit growth in future as well.
Long and extended, how extended a future do you believe this double-digit growth could last? Would it be, I mean, would you have visibility for the next couple of years, or would you have visibility for, say, the next 5 years?
So we have a 3-year business plan in place. That's our internal mechanism, and we are sure of that. And for longer terms, even beyond that, we do not see any challenge. As you rightly said, our numbers, top line, still is not that large, and US is a huge market. It's about 20 billion market, and we are about 2% of that market. So we have a huge runway for us. So we see this growth for many, many years.
One small concern that I think Nikima analyst is flagging off, the TV sales volumes on a 9-month basis has apparently come off in terms of the number of units. What explains this?
So in fact, in our business, because the number of SKUs is huge, it's not one standard product. There are too many products and SKUs. Just to give an idea, we have about 600,000 SKUs. And there is a lot of variations in average selling price. Price varies from product to product. So it should be always seen with respect to the overall growth. Because if the ASP is higher, average selling price is higher, the volume would be lower. If the ASP is lower, the volume would be higher. So these are very much hand in hand to each other. But overall growth in terms of volume is 5.4%. And likewise, our platforms also, they are integrated platforms. We are on TV and we are on web. Now, within the web, we have TV. So our customers, they watch the TV and they can make the purchases through web. So we cannot segregate web from TV in that sense.
Any specific reason that your finance cost as compared to the September quarter has gone up?
No, finance cost is lower.
No, it's lower on year-on-year basis, sir. It's 91 crore for the December quarter and 70 crore for the September quarter.
For December quarter, it is 0.9 crore compared to the 2 crores of year-on-year.
Pardon me, sorry, sir. Yes, the numbers are given in lakhs. So yes, it is 0.9 versus 0.7. So definitely on year-on-year basis, it has gone down. Could you tell us what's the exact debt picture then? Would you be looking at any sort of fundraising in the near future?
So on debt side, we are a zero debt company on net level basis.
Right.
In fact, on net debt basis, we are cash positive. There is a minus 11 crores net debt position. So we do not have any debt that way.
Sure.
Only
okay.
we have working capital from the banks. But on net level, including the working capital, we are at zero level.
Okay, Mr. Aggarwal, we'll leave it at that note. Appreciate you joining us today and taking us through your December quarter earnings. Well, that's the management of Vaibhav Global. Good set of numbers on the operating front. But as we've seen, most of the companies which have reported good numbers, we've seen some profit booking after the numbers have come. And that's been the case for Vaibhav Global as well. The counter today, it's trading with cuts of almost 4%. I just
wanted to mark HPCL, Navneet, while we were talking about the others. Look at the intraday move on HPCL. It was up, yes, but it's now overtaken IOC to become the best performing Nifty name and the best performing OMC name. So about 5% higher in trade for HPCL. IOC naturally, after the bonus, is up and about. but HPCL is the...
In fact, top 3 gainers now in Nifty are oil marketing
Oil marketing
companies,
companies.
HPCL, IOC and BPCL.
Okay, so before we go to Fab 4, final thoughts from Nipun Mehta, still waiting by with us. Nipun, thanks so much for being patient, but I don't know if I asked you about the OMCs, but if I didn't, would you have a constructive view on the oil marketing companies?
For sure, yes. I think, Neeraj, some of these fell on the basis of individual news that was there, particularly if you look at the HP-ONGC merger and whatever was perceived in terms of which company will benefit. But overall, if you look at least the initial set of results that have come by, if you look at the GRMs, they've really surprised. If you look at GRMs for IOC, that the results that got announced today, I think very clearly you're seeing a big shift as far as GRMs is concerned. We haven't seen these kind of GRMs for a long time for the public sector oil marketing companies. We've seen it for companies like Reliance, but really, I think this is something new and different as far as the public sector oil marketing companies is concerned. And I think clear beneficiary out of higher crude oil prices, overall gradual expansion happening for some of them, which is likely to have greater visibility coming in for subsequent quarters. So I think very clearly oil marketing companies should be continued within portfolios as far as we are concerned.
Leave it at that, Nipun. Thanks so much for taking the time out and joining us and giving us that perspective. Sacchitanand, HPCL, any thoughts here?
Well, I think the recovery is very strong. In fact, if you look at the level perspective, I think 401 is something that can be seen immediately. One thing which is hitting my radar is Coal India. In fact, if you look at the formation there, that the formation is indicating that there could be a fresh momentum in the offing. So probably that is one counter which is looking like a BTHT candidate for me. So keeping a stop loss somewhere close to 299, a trade can be initiated here for a target close to 315.
Okay, let's talk about the Fab 4 stocks of the day, and to take us through the same today, Nikki Mirchandani joins us. Nikki, over to you.
Hi Navneet, on the day when much has been talked about mid-cap and small-cap stocks, first on our list, with no surprise for guessing, there's Reliance Communication. The stock rose as much as 20%, which is highest intraday gains in nearly a month after the company reported its numbers, where the net loss for the company has narrowed down to a number of around 130 odd crore as compared to nearly 531 crore that we've seen in the corresponding quarter of the previous year. This, along with that, 24 lakh shares have been have exchanged hands in multiple block deals. Second in the list, we have KPIT Tech, where the stock has rose as much as 7% and has risen to the level of around March 2015. That's basically on the back of restructuring announcement and along with the management commentary coming in, where they expect the revenue to again regain path back in Q4 after reporting a muted Q3. Next in the list, we have Monetis Part. Now remember, this is a company which is undergoing insolvent proceedings. Their JSW Steel, after has apparently sweetened the deal for the company by around 200 odd crore and has placed the bid for this company to a tune of around 3,700 crore. Now these are a report which is suggested by PTI. And last in the list, we have Ester Industries. There the stock again has risen to the sharpest intraday gain in nearly a month now, after the company has signed a pact with Shah Industries, which is a subsidiary to the Berkshire Hathaway. That's for supply of a registrant batch for the company.
Thanks for that, Nikki. So those are the Fab 4 stocks for the day. Do we have Meghana Malkhan? We'll probably just try and patch that line in moments from now. But while we wait for that, what else is doing well? There is some strength in Prism Cement, if I'm not wrong. Just pull up the intraday of Prism Cement. For us, it's up 5% if I'm not wrong. Prism Cement, yes, now trading at the high point of the day. So doing well. Graph Finance, yesterday's big loser, is up about 4% in the session. So good going there. And GVK Power and Infra is up about 2.5% as well in the session today. Might be difficult to trade a stock like Graph Finance, Sacchitanand. It's just showing very, very difficult moves these days.
Well, the way it has reacted from the levels of around 500, we saw a very strong rally till 720, and again a sharp fall. But I think in the last 2 days, the magnitude of the fall has not been that substantial. So probably it may just consolidate here. I think 570, 560 is a good zone where we may see some consolidation.
Well, the other stock which has gone up in trade is Balkrishna Industries. Let's just pull up that counter. In fact, I was just looking at the stock future as well of Balkrishna Industries, and we've not seen much of build-up, but still it's up over 4%, and the spot price also is trading with gains of around 4.5%. Sacchitanand, at these levels, 1160, would you take any fresh bet?
Purely from a BTST perspective, one can consider taking some long positions here. A stop loss can be placed around 1133, and looking at the way it has reacted from its intraday lows, probably we may see an extension close to 1190, 1195 in tomorrow's session itself.
Okay. Stay on. We'll get some final thoughts, Sacchitanand. But remember, Piramal Enterprises, strong show. And I think the management spoke to Darshan. Let's hear out a small slice of that conversation.
If you look at the overall performance of the company, it has been very robust. The top line has grown by 21%, and the bottom line has also matched with that. And if I look at the 9-month numbers, our top line has grown by 26%, and the bottom line has grown by 25%. And I see going forward also that this will continue. In fact, we've had a very consistent performance in the company. For the last 10 quarters, in terms of the financial services book, for instance, we have grown at 68% this quarter compared to that of the previous period. So overall, I think it's a good, solid performance, and I'm optimistic that particularly in the financial services, where our book today is 38,000 crores, we've already got loans which have been sanctioned but not disbursed of another 22,000 crores. So that's a strong book. The pharma sector also looks to be good, because if you see in the last quarter of any year, the last quarter of the calendar year, as far as global pharma is concerned, they bring down their inventories, so they bring down their orders. And traditionally, we've seen in our company that the January to March quarter is the one which will be the highest growth in the pharma space as well.
Okay, as far as your loan book is concerned, 60% of it is real estate. How do we see this mix over the next few years?
So over a period of time, the real estate space is, we are diversifying our books, so the percentage of the real estate will come down. It will come down to below 50%. Our corporate loan book, which means loans to corporates other than to real estate, is growing rapidly. We've also got an emerging corporate loan book, which is for smaller companies where loan sizes vary from 10 crores to 100 crores. And then we've also started housing finance, and actually I'm very pleased to say that in the first quarter itself, the housing finance has taken a robust start. We have already disbursed in the first quarter 490 crores of loans, and the outstanding loans on our book are approximately, which have been sanctioned, are about, these are loans which have been sanctioned are about 700 crores which need to be dispersed. So it's a good beginning.
Okay, on the pharma space, the non-compete will with Abbott expires this year. What's the plan there? How do you plan to grow it? Are you going to get back into domestic formulation, or you have something else in mind?
As far as the non-compete for with Abbott was concerned, it was for the domestic generic branded generics market. We are not yet decided what we want to do. The non-compete is till September. I think then we'll decide whether to enter this space or to not enter it.
You're doing.
That's of course Piramal Enterprises with their thoughts on the quarter. It was a good quarter. The stock's done reasonably okay. Okay, 320, almost there. So let's get in closing strategies. And firstly, get in Meghana Malkhan, author and trading coach at Malkansview, joining us on the show. Meghana, thanks so much for joining in. First, a thought on the index, and are you taking any strategies ahead of the budget? I think we've just lost that line, but it's 3:20. Sacchitanand, for a lot of people who are tuning in right now and trying to understand what to do in a scenario like this, a Nifty strategy or an index strategy if you have one, and then couple that up with your BTST or STBT as the case may be.
Well, as we discussed, we are continuing with our optimistic stance on the market. If you look at the overall structure, the way we have seen a breakout, a couple of weeks back, that clearly indicates a price target somewhere close to 11,436, and we stick to that particular target. So, going with that view, what we are recommending is a call ratio spread on the Nifty, wherein one call option of 11,200 should be bought, and two call options of 11,500 could be correspondingly sold against that call option. So you have a net spread available at around 50 points. That will be the risk for this particular trade. The spread target that we are working out is around 155 points minimum on the budget day. So probably one can look at this particular strategy. It's a low risk strategy as of now. If you look at the maximum risk, that will open up only in case the market starts moving above 11,750, which looks very unlikely. So probably it's a very safe strategy to go ahead, probably on the directional side. On the BTST front, as we discussed, Coal India is something that is gearing up for momentum, and we are looking at a price target for Coal India around 315. A stop loss can be placed around 299. And the second stock that we are liking is Hexaware, wherein we have seen for rising 3 pattern getting formed. A stop loss can be placed around 372, and a target of around 400 can be expected.
Okay. Sacchitanand, one stock, if you could just quickly look at the chart of Kotak Bank, will you short it today?
Well, if you look at some of the private sector names, they have already run up very well. In fact, Kotak is now, yesterday we saw a fresh lifetime high. So probably, I would not go ahead and, recommend any short positions here. We may see some consolidation, but overall, I think there's inherent strength in some of the private sector banks, and I think, I would avoid taking a contra trade against the trend.
Okay. Lancelot, CIO at ValueX, joins us right now on the show. Lancelot, thanks so much for joining in. A strong dichotomy. Private banks still continue to do well, except for this recent downtick that we're probably seeing on the charts. What are you doing here? I mean, expensive space, so book profits out of it, or lack of options to stay invested?
I think, it's obviously, if you look at the growth curve ahead, one should stay invested if you're already invested. So I would not really try to book profits, especially in the few strong private sector banks, like you have IndusInd Bank, HDFC Bank, where they have continued, sustained earnings growth over the years, and it still looks to be better with the global macro situation looking better, as well as the Indian economic growth also looking better. I think private sector banks will continue to do well. There may be a case in the other private sector banks like Axis Bank and ICICI Bank, which have risen significantly from the lows, to look at some profit booking, because the financials of these banks are not totally out of the woods as yet. The NPA resolution is still in progress, and we hope to see better resolution. But in such cases, one can take a little profit and wait off the table. As far as the public sector banks are concerned, I think what the government has done now is actually help them in a long-term strategic turnaround process. But the banks per se have to improve in the way they disburse and in the way they do business, and that has to reflect in improved efficiencies and earnings growth, as well as reduced NPAs. Unless you begin to see indications of this, it's very difficult to take a call in the PSU banks.
Okay, fair call. By the way, a couple of other stocks before we get in Meghana, Malkhan as well. I think the new kid on the block, and we should discuss that, Amber Enterprises, should come up on your screen, went up as high as 41% intraday, currently at about 44, so very strong listing, ending at the high point of the day. Lancelot, any thoughts here?
Track this company, so
you don't track the stock, but This was anticipated that it'll have a strong listing today because the response was very strong. The stock ending almost 44 points higher. Just before we start wrapping up the market, I'm told Meghana is finally with us. Meghana, if you can hear me, if you have an index strategy and if you have a stock strategy, a BTST or STBT as the case may be.
Yeah, hi. Good afternoon. Apologies for the misconnection.
Not your fault. No, but thanks so much for waiting by.
Okay. Index, I think, yes. I think we should continue the buying on the index. Till the time we have definite signs of reversal. I have a buy call on Nifty, but on dip to 11,030. We can buy on dip to 11,030 with a stop at 11,000. And I think then we could see targets at 1150 from there on.
Okay. What about an STBT or a BTST as the case may be, Meghana?
Oh yeah, I have two buy calls actually from the IT space. I like Aggarwal. I mean, it's taking turns and the IT stocks one by one. They're all moving out of their zones. Especially in terms of Aggarwal, I think the weekly momentum is really gaining strength. I see volumes building up on the daily charts as well. So Aggarwal is a good call to buy with a stop of 370 for a target of 420. And second good setup that I see is on Tata Global beverages. The stock is really gaining strength in terms of momentum and lower as well as higher time frame charts. Volumes are building up and I see good candlestick patterns building up too. So Tata Global is a good buy with a stop at 300 for a target of 330.
Okay, so these are the calls coming in from Meghana, Malkhan. Lancelot, another IT stock that is in limelight is Mphasis. And if you track Mphasis, the stock has crossed its all-time highs that were hit in 2009 after a gap of almost 8 to 9 years. Yesterday, we saw the new lifetime highs being hit by this one. And today it came under some profit booking intraday. But fundamentally, what's your view?
I think, I don't track Mphasis. But if you look at the view for the sector per se, there has been an improvement in the results that we've seen so far. Even in companies like Interact Design, etc., we've seen some improvement in the results for this quarter. So the outlook is that things are really going to look better because the fears that had set in the previous selling that we saw seem to have now abated. Some of the companies have taken steps to improve their digital business, and that is generating higher margins. So the outlook is still positive, and maybe because valuations had also come off, so many of the companies in the IT space were also trading at reasonably good valuations. Those companies would look attractive at this point in time. So it is an attractive sector to be in. I don't have any specific call on Mphasis as yet.
Okay. Stay on, Jamin. We'll start wrapping up the markets. Head over to Navneet to start off with the indices in the large cap space. And suffice to say, quite a bit of pain, Navneet.
Right, Neeraj. In fact, today was the day when there was profit booking seen across the board, be it benchmarks or the broader market indices. So these are the benchmarks. Nifty closing the day with cuts of 80 points around the mark of 11,050. Sensex defending the 36,000 mark for the day, down over 220 points. And the bank Nifty was down almost 240 points. Remember, the support was at 27,250, which it has managed to defend for the day. Let's also tell you how the broader markets panned out. The Nifty Mid-Cap 100 Free Float Index is closing the day with cuts of 140 points. The small cap index is the space which has seen more pressure in the recent past, so down 1.7 points. And the BSE mid cap index is closing the day with cuts of over 100 points. Let's look at the Sensex constituents and see which were the stocks which dragged the index lower. Well, the screen today is dominated by the red. But let me start off with the gainers. Hero MotoCorp was up yesterday as well, so there is some strength being seen here. Hero MotoCorp closing the day with gains of 1.5%. Coal India also up almost 1.5%. Sun Pharma was the other one which is managing to close the day in the green. And your heavyweights from the likes of State Bank of India, L&T as well as ITC are the ones which didn't see any substantial gains, but it is closing the day in the green. On the losing side, Asian Paints was your top loser on Sensex, down 2%. Dr. Reddy's Laboratories also down. Remember, this counter has been going down post its earnings. Kotak Mahindra Bank, Adani Port, Axis, all of these stocks were down. Reliance Industries, the heavyweight, TCS, another heavyweight, ICICI Bank, Infi, HDFC, you name it. And all these heavyweights today saw cuts coming about, Pradeep.
Well, in mid-cap space, there are more losers and gainers, but let's begin with the gainers first. Amber Enterprises, the new kid on the block, stock listed today with almost 40%, 44% premium at the end of the day, one would say. So smart gains, and let's hope that it won't really go the Apollo Micro way and it will hold on to the gains from day one. Monet's path is the next key winner in today's trade. While Bhushan Steel corrected, Monet moved up today on reports of likely valuations under the NCLT auction. Reliance Communications recovered along with a few more ADAG stocks in today's trade. KPIT Technology, after announcing the reorganization, moved up in today's trade as well, and Satin Credit Care from microfinance space was doing well in today's trade as well. And what came down, Bhushan Steel, as I mentioned earlier, corrected after yesterday's smart gains. You also had Wockhardt correcting by almost 10% post numbers. Vakrangi and PC Jewelers were among key losers with good volumes. And also Imami Limited, one key number that disappointed the markets. Stock corrected quite a bit, ending the day close to the day's low, in fact.
Yep, so well, that's the long and short of it. Just bring up what the market action eventually is look like and the contributors list as well. So, well, ending very close to or at the lowest point of the day. You could argue it's close to the lowest point of the day, and the market breadth too. Not good. In fact, what we had today at the dime moments of trade is something that we had today for most part of the trading day, and the market breadth just couldn't recover from the kind of levels that we were at. So close to 1:4 in favor of the decline. So yawning gap and stayed that way, ran pretty parallel to each other for most part of the trading day today. Contributors, and you'll probably see OMCs making, I mean, if all three were clubbed together, they would probably be the ones which are holding out. But as you can see, IOC, HPCL, BPCL, those are the only noteworthy movers on the gaining side. On the losing side, Reliance and HDFC under pressure. Not the top losers by percentages, but heavyweights of featuring out here. But yeah, Kotak Bank certainly amongst the top loser by percentages as well, 2.5% or thereabouts if I'm not wrong. And this one clearly took it on the chin. ICICI Bank to down. Nifty Bank not having a particularly great day, 1% down for the Nifty Bank, led predominantly by some of the large private banks as well. And the volumes, I suspect, the FNO volumes, okay, this is the Nifty Bank, of course, which is down. The FNO volumes, well, actually par for the course, really. I think it's a mirror image of what we did yesterday, maybe about 500 odd crores lower or higher, but the volumes have pretty much been in line with what we've been doing for the past few days. Nevertheless, final thoughts from all our experts, and Sacchitanand, to you first. We've discussed the index at length, but the Nifty Bank, which is closed in at almost the lowest point of the day, led predominantly by the private banks. Is there more in store, or is it difficult to say that right now?
Well, actually difficult, but if you look at the the way the data is shaping out, I think 27,200 is the critical support so far as the momentum is concerned. Probably after a substantial rise of 8 trading sessions, couple of trading sessions does not distort the momentum. So overall we stay optimistic on both the indices. On the Bank Nifty front, I think 27,800 is something that we are highlighting. And on the lower side, I think 27,200 would be a critical support so far as the momentum is concerned. So far so good. I don't think so we should read much into it.
Lancelot, closing thoughts from you. Do you think there can be more correction that can be seen before the budget now?
Well, I think a lot of expectations about capital gains taxes, or the time period being extended for long-term capital gains has been going around. So maybe you might see a little bit of correction in anticipation. People with long positions would try to reduce the leverage before an event like the budget. But I think post-budget, the underlying tone is still bullish, and we have seen a lot of money still sit on the sidelines waiting to be invested. So I'm sure that once clarity comes in on the budget side, we should be able to see the markets again. People put in more money for investment, and that should drive markets further up, at least in the short term.
Okay, Lancelot as well as Sacchitanand, we leave it at that note. Appreciate both of you joining us today and taking us through your thoughts on the markets. But with that, it's a wrap on this edition of Countdown. Up next, we bring you a special edition of Ask BQ, where we answer all of your budget-related queries. So stay tuned to that.